Hello everyone, this is Namuse Hamida's group and we are going to take you through recording expenses. First, recording expenses. We record expenses to track the money spent on the business, and there are many business expense categories. We have rent, utilities, office supplies, and so on. So there are so many different ways we can record expenses. So, and we went through three methods. We went through writing a reimbursement check, making journal entries, and assuming that the money came. And then we assume another method is when you assume where the cash is coming from. So I'm going to take you through the first method of making journal entries. I made some slides. We made some slides on journal entries. It's the power of a journal entry. The rule equals total debits must equal to total credits. And for example, I made an example here that for bank fees, we assume that we are recording bank fees. If you are checking the account, the money must be on the credit side. Here in the scenario, explain the scenario here. The bank charges $25 monthly service. Explanation: this increases your expenses, and this decreases your bank balance. Shows that money is leaving when we credit. So let me do it for you here practically so that you may be able to see. At first, let me open my QuickBook and we go to company. We say make journal entries. So here, let's say that the owner of the company took their own personal cash and paid for something. What do? You go to the journal entry. There are two ways on how to record here in the journal entry. One, you can record the expenses manually, or you can make an Excel spreadsheet, then categorize them by the type of expenses, then summarize them every month. Now, but here I'm not going to make an Excel spreadsheet here for this. So let's say that I'm on 1st January, yes. We spent our money on admin. I spent my money on laundry. I spent my money on laundry. Here, I'm going to record how much money I spent on laundry here. I spent 500 Kenyan shillings on laundry. Then, like, which account is paying the laundry? So let me pick. I paid by bank. So this is the owner's contribution. The owner's contribution goes to the credit side. Owner's contribution goes to the credit side. You can also say, you can also add new. You can also say paid laundry fees, anything. But that the DTB is owner's contribution. The money that's from the laundry, because if we credit, we say that we show that the money is leaving the bank. So then we save and close. Yes. So let me allow my colleague to take you through another method of recording expenses.
Hey everyone, this is Hamida, and as my colleague has explained about the first method of recording expenses using journal entry, now for me I'm going to explain about when you're using petty cash. Okay, we are going to come here on our list, go to chart of accounts, and here on chart of accounts we are assuming where is our cash coming from. Is it DTB or it's here? We choose petty cash because it's where our cash is coming from. Yes, we come here, we select the date and when our business is commencing. After there, come here, and here and description it's cash. Yes, cash is there already. We put it. Come, we choose our vendor. For our vendor today, we have many vendors here. We're going to choose HEMA. We're choosing HEMA. HEMA is our vendor. What is he offering to us? Come here. And you know HEMA offers cement. So we come here, going to just add this cement since cement is not there. We are going to add cement. Description. We are going to save and close. Cement is there. the cash is now on the cash, which we are on the cash. We are going to here on cash. We are going to assume our cash is 200, and after there, assuming our cash, we come and record our expense. Yes, we save our changes. Okay, let me hand it to some other colleague to take through.
Hello, I'm Rita, and I'll be taking you through reimbursement. That means that if an employee wants to be paid back the cash that he incurred during paying for the expenses, we reimburse him. So I will go straight to the QuickBook. So I'll write a check to reimburse him. Now here, the bank account, let's use the petty cash. Wait, let me use DTB Bank. And then here, who are we paying? So we shall use, let me say, we're using Julius Estates. Then we come here, the amount that we are being reimbursed for, we say, is it 200,000. Okay, let's use 100. 100,000. And here, address, we use Gilead Steel. is still Julius. And we come here. So we are paying expenses. So we shall come here. Add new. You have to check thoroughly and see that what you're going to include here is not available. Because if you use it again, if you make another one, you'll be doing a mistake. So you come and check here and see it's not there. You add new. Let me first see. Yeah. Come here. Add new. It's already an expense. You continue. So name of expense, let's say salary. The salary, so we come on self close. So we allocate the amount of money, let's say 50,000 for salary. 1, 2, 3, 50,000. Then we come again. If we have another expense, we come and look for it here. If it's also not there, we cross check. It's not there. You come and add new. It's already an expense. So it's electricity. Serve and close. Then you put the amount 50,000. After that, you serve and close. You serve and close. So yes, and that is done.
So those were the methods. Yes. So here on so those were the three methods we used. Those were the three methods. We used the petty cash, we used the journal, and the reimbursement check. So here are some of the sample questions we came out with. So I think that's all. Thank you so much. I remain Arnold. This is Namusu Hamida's group.